Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Well, thanks, everybody. Everyone, welcome to the Traders Lab. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. The stream is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. If you're visiting in YouTube, there's a link down at the bottom of YouTube if you would like to visit the Trader Lab. There is no cost to access the Trader Lab community. It is a group of like-minded traders who've come together to leverage their collective experience. Our senior trader has over 50 years experience. I'm going on 45, and both professionally and now sitting out here in the ether with you in the retail space. And the idea of Trader Lab is to help traders build out the business side of trading. That is, what is the business of trading? Trading is not really about indicators and time frames, though they all have a place in there. It is about understanding how this business works, what the typical obstacles are for retail traders who are attempting to establish a business and longevity, and to maybe get a different perspective on some of the things that need to be done to create at least a potential path to achieve retail trader goals, which might be a sustainable business. The business is very much gaming and statistically based. It is random in the sense of how the market behaves, what the participants do at any specific time. And while most retail traders are in a mindset of predicting what's going to happen next, my experience is you can't predict anything in this business because it only takes one trader or one bit of news at any specific time, which is an outlier, to disrupt your trade and take what might have all the underpinnings of a successful opportunity and cause it to lose. If we can accept that random aspect of this, then our goal should not be to predict. Our goal maybe should be to align and only interact when we have a statistical edge. This is how the casinos operate. It's been very successful for them. They only play games that are vetted, have a statistical edge, and they play them exactly the same way. Since we are emotional beings and we are wired to avoid danger, fight and flight and all that, no matter what our intentionality is, we're always pushing back against our primal wiring, which is flight from danger. And that represents itself in not taking trades, bailing out of trades, moving stops, whatever else you can do that is not in your best interest in trading might be in your best interest when you're out on the tundra with the saber-toothed tiger, but not in this business. So the process or the alignment you might seek is to understand gaming and to reframe when you're in trading what you need to manage and what your objectives are. That's Trader Lab. And you're all invited to visit, and there is no cost to visit Trader Lab. So let's take care of business. And like everything, you have to vet any ideas you hear anywhere from anybody, including Trader Lab, and see if it will align with you. Because in the end, it's what you believe. Now, the thing about beliefs is sometimes we can have a belief that is not in alignment with this business. And because we believe something and there's randomness in this business, in other words, you could flip a coin or throw a dart at a board and you'd still have winning trades. And because random behaviors do work, we may think that those random behaviors have a statistical edge and we just have to make them better. Now, that's logical. However, casinos don't do that. They determine what has an edge, and they don't try to fix something that doesn't work. They establish the edge, and this is what structured trades are about, which I share in the Trader Lab. And the key to this is you need to make it your game. not somebody else's. You cannot replicate what somebody else does. So Trader Lab, the community of the Trader Lab really is taking processes and re-engineering them, if you will, but having a foundational piece or a track you can run on. And then you kind of find your groove or time frame or rotational structure, whatever that process is. And these structured trades can give you a basis or a template to operate on, but you have to make it your own. So with that in mind, general disclosure, all Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only, and you do have to take responsibility for what you do when you interact in the market, because everything is random. So when you're in a random environment, the way that you might want to approach it is to understand market mechanics. How does the market work? Why does it do what it does? And how might you at times get in alignment with it? So let's talk about the condition of the market. Now today, of course, being Monday of a very intense week of economic reports, starting with tomorrow, it's going to be very active and potentially very volatile. The market has been in an uptrend, grudgingly uptrend, with two-sided trade, very contested. Now, the trend is up-ish. However, if you've noticed, recently it's been a two-sided battle all the way, and kicking and screaming, if you will. And that's hard for us because of rotations. At least for me, there's two major contexts in the market as I defined it. Now there can be more, but in Trader Lab we concentrate on two basic or fundamental processes. One is the market gets directional, so we get these outsized rotations, and it's kind of like a bullet, and then the market pauses and goes into consolidation. Or the market can open, have a little bit of a directional move, go into consolidation. Now, consolidation is just a ranging trade, up, down, and it doesn't really go anywhere. And then what happens in consolidations, as you guys know, it can break out, and then it creates the directional move. So you can move from directional to rotational, or rotational to directional, or depending on the time frame you operate in, multiple aspects of that through the trading day. And that really suggests that one mode of trading does not apply. It is different modes or different contexts. What's difficult about this is that we don't know until hindsight. This part of the joy is it's kind of like you're either driving on the Autobahn or all of a sudden you're in the mountains. And I know when we're driving an automobile, we can see the mountains. In trading, we can't see the mountain until we start driving through it. And if you're driving at the speed of the Autobahn, when you're going up a mountain with no guardrails, you can drive off the cliff. So I hope you appreciate the analogy, but the thing is, you have to know when to change. And in trading, we don't necessarily know until it does. So one of the things I always suggest in Trader Lab is that traders have conditional statements and that they narrate the market. So we can anticipate certain behaviors in certain conditions or contexts, but when they change, and that's why we have to stay in a narrative of conditional statements. So if this, then that, and then if it doesn't do it, well, what's going on, right? If it does do it, then you can anticipate continuation until it doesn't. So we're always behind, to a certain extent, what the context is. However, when the market opens, based on the ETH, we know already, and I posted this in Trader Lab, that we are in a two-sided or rotational trade, similar and continuing from Friday, Thursday, and last week. And so let's go from there. So I find these days, for me, are not my favorite days, because I'm just like everybody else. Well, maybe not like everybody else. I mean, others, I'm sure, do it better than me. But when I get into two-sided trade, it's problematic, because what I try to do in two-sided trade is find outside edges for mean reversion. And let's assume the high volume, which is what this is represented. This is called the developing volume point of control. All this is in auction market theory is where the retail price is. Retail meaning the highest volume, where most traders at this time are willing to do business. And as the day develops, this moves around because pricing changes. So one way to think of this is, and now this is RTH open. So let's just say the market comes down, it's on sale. The market goes up, it's too high. This is rotational trading. Then the market comes down and then it reverts back here. So it's mean reversion trading. This is what's called outside in trade. Very difficult because are you going to get long here? You're going to get squashed like a little bug on the windshield. It comes out here. Do you get short when it comes back here, or do you try to get long here to come here, take out yesterday's high? This is the difficult part. And it's very difficult for me. I find it not pleasant. Matter of fact, this is the first trade I took right here. And now, part of the reason, and I took a stop on it, but I want to show you the reasoning. We have a high probability statistic. We're going to take out yesterday's high and the ETH high. So, but I also know I'm in two-sided trade. So when I get this first move up, I consider it's almost like, am I going to take the bait? No, I'm not. I know this is at the time the opening swing low. So if I can come down here and take this out, and then I see absorption, which is what this is here, I want to try to get long to come back here, and at the time to come over this. So that was my first trade. It did not work. I had a very exciting experience. So right here, this is my opening swing low. Okay. So right here, this is where, right in here. So I took this out. I saw the absorption and I got long. So I got long here and I was looking for this and this. I thought it was a decent trade, at least to get the buy stops out of here. So when I was looking at this, I was going, well, outside in, squeeze, and then maybe yesterday's high. So I got taken out over here. So I'm just telling you, that was my first shot on goal. It came out here. I took another one because we just picked this off. I said, stop pick. Here's the absorption again. I got long again. This time I got scaled. I got more conservative with it. And then I'm looking again for this. So this one scratched out. Then I said, okay, I am out of alignment now. I have to step back, which is what I did here. And then I said, well, that was smart. By the way, smart is I took two trades that were in alignment with my plan, just trading for the rotation. And when they both failed, one stop, one scratch, then I pulled back here. I had a choice here to get short, and I decided that I was not going to do that. I was going to let it come down because I want to be on the long side. So instead of getting short, I just waited on it. So then I have statistics. I have settlement, overnight mid, naked volume point of control, and I have the overnight low underneath. So I took a pass, didn't take that. Others, I'm sure, took it. It would be a great trade. So here's my overnight low. This is a high volume structure in an intermediate time frame. This was also a potential target coming down. I came down over here. I'm looking for it to reverse here. What do I see? Chop, 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 break low, test it from underneath. We couldn't get back above it. If I was taking shorts, this would be a short. I did not take it down to here. So yeah, I could have taken this. I didn't do it. Just talking about me doesn't mean somebody else should. So now I'm finally on the outside and I go, okay, now I have a target, and I posted this morning. This is before the open in TraderLab, and it's here. So what I was looking at early on was this. It's 97-ish. So that's my target coming up. I think 90, whatever it is here. Let's see what it is. 97, 97 half to 5,400. I posted this. So right in here was my target. So when I'm looking at this, I was taking the longs with the idea of taking out yesterday's high, overnight high, and getting here. So basically what happened was I got out of alignment. I took my stop and my scratch, and then I just stood back. I said, okay. And once it started moving away from me, I just decided not to participate, and that's okay. Doesn't matter to me. So now we come down, and I'm looking for, and this was interesting. 50. Let me just confirm this, guys. Is 53.44 and a naked volume point of control? Trader Lab, is that still a valid? Hold on a second. No, it's not actually, is it? No. 53.44 stale. Is that correct? Trader Lab? Sorry, guys. I got to get this clarified. I'm waiting for an answer. Stale? All right. Thanks, Dustin. Okay. So overnight low, ETH low, becomes a target for the short side. So now this is where I start getting long again. Now I go, okay. So this, coming all the way down here, once we started breaking down, this is my next area. This also, value area low. So we come down. Now I start seeing absorption here. Now this is where I started working on the long side. So I'm going to show you these. So whatever happened in between happened, and that's life in the fast lane. This, by the way, is a short. I did not take it. Maybe I should show it to you. I will show it to you. So we break, we come down. This is called, for me, this is a microcomposite variable high volume node. It is a previous location of a intermediate time frame volume point of control. So it's a higher time frame. What had happened is this is where we were previously, and this location migrated higher somewhere up here. Hold on. To here. 54.25 quarter. So this is still targets for today or whenever up here. So this is a target, and this is a target up above, which if we get rolling, we take out this high. These are the next targets, 54.19-ish, and this 25. This is the current highest volume in what I am measuring. And you can always shape these to what you want to see as far as in volume, what's important to you. I just do what's important to me. This is where this was located previously. So this is too low. So when I came down to this and broke under it, the potential is to short it to go down to the next level, which is that overnight low. Again, I didn't do it, but I'm going to show it to you. So these are options. So these are trades. These are Trader Lab trades if they're vetted. Everybody does their own thing. Let me try to get back to this. And we'll show you. So here is this level. Now there's a couple possibilities here. Right here, this can be the potential low and revert back here. However, this is the ETH low, so I cannot get long off of this because of this. Because there'll typically be stops on each side of these extremes, the ETH high low. So when we break below this, it sets up a short, which I did not take, to here. So, if you want to trade for, that 48, if that's a 10-point range, it's up to you. I'm going to show you the trigger. So this right here is a micro high volume structure. These buyers are being absorbed. sellers are being absorbed. It's a consolidation. And you could see the outline of the consolidation here. And what's important is there is alignment with this. And kind of what this looks like, if you want to think about this, I'm just going to just draw a little box around here so you can see it. You know, this is what a consolidation is. It's very simple. And so this is like, I'm not paying that. And down here, it's on sale. So this is what creates the rotation. Inside of the rotation is high volume. And again, a simple concept. So chop, 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 break out. Now, so you have the consolidation, and these are triggers. Break out, sellers take control, pull back to the high volume structure. This is an entry. Against this, you have alignment. And so you put a limit order here. You have to vet this, or here. Stop needs to be here. So it's a couple points. It's all up to you. So what does it say? Let's look at what it also says. We go here. Buyers got absorbed here because they couldn't get out here. That means the sellers were absorbing this. You see the sellers here, the delta. That's pretty good selling. 158 sell stops coming out. Now I go into chop. The buyers up here are being absorbed. So this is what's creating the two-sided trade. I know this is too high and I have aggressive selling here and sell stops. So chop, 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 chop. The sellers overwhelm the buyers or the absorption under here. So what you had here was buyers were absorbing these guys. Once we break under them, that becomes resistance, and that's resistance. There it is. So that's your short. This is your target. So this is a potential structured trade if it's in your thing. And look where we come back. You should be screenshotting these behaviors and structures if this interests you, because it is a language of the market. I don't use indicators. What I use is what's going on right here, because the movement that we use our indicators to detect is really more a function of output of price or derivative. So when I come here, it's a short. When I come back here, notice where it is. It's a short. It's the same thing as this. It's this. Stop is out here. Now, unless you put a limit order, you're not going to get this. You'll be entering wherever you hit the plunger. But this is your target. So that is where you're going. This trade would be over if you took it. So it's not, the range is workable if it's in your plan. And notice where we come back, right here. So anyway, this trade would be over for me right here. So I don't go beyond that because I have no clue and I trade through statistics. Now, I'm going to get rid of this. Let me just jettison this thing. Well, let me keep it on just for a minute. Notice what happens here. Break low, back to where? Here. Down it goes again. Now, again, for me, the trade's over here. And I don't get long here because I have no clue. I don't pick the bottom of anything, not my skill set. This is where I start getting long. So let's take a look. So this is too high. This is our developing volume point of control. This is the highest volume. When this shifts down, this is the highest volume or retail price. Now let's think about this for a moment. This was our target and nobody knows. You see this here, this is our absorption detector. And really what it is showing us is the icebergs in the absorption. So you have sellers here and we see absorption. Now that doesn't tell me get long. It's a wake-up call that there's the opposite side. Here's sell stops and there's buyers here, and buyers here. So that's what I know. So there's absorption here. Now that in and of itself is not a reason to get long. It is a reason, at least for me, the way I try to look at this, it's a reason to be observant. In other words, maybe there's a change in behavior coming. So let's take a look here. So I got my absorption here. I break high. So right here, this looks like a long setting up here. I break high. Now I see my seller. Here, let's look. My seller, and I'm looking at this. right here. I'm under it. So now I'm under this where I have my absorption, and I think it's going to go to 0 because I want it or need it for my setup to be above this, and it's not. So I think at this moment, oh, well, that didn't work, But now I come back up. This is resistance. I'm going to draw a little line. Let me show you how it manifests itself. And again, everything is random. So, I break high. So I get my buyers here. So now I know these sellers. And the way I think of this, I'm just going to give you a thought process. When I see buying here and buying here, that's not an indication that that's the low of anything. It means there were buyers absorbing. When it comes below there, the question I always ask myself is, are these buyers who thought this was a bargain because they stepped in and absorbed it, are they going to show up again if we come down here? Because picking the low of anything is definitely a problem. So, but this is what we have to get above this, and we go below it. So there's nothing happening here until we come back above this. And that sets up this structure. Let me show it to you. I'm going to draw it for you. Same thing. These are just structures. That's all they are. So let's look at it. So basically, you get your chop, 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 chop in here, break high. So now I have support here, and let's just see what it is. What happens? What happens here is, now, first of all, I don't get back here. That's okay. Now, I know, though, I've got a breakout here, and the ideal thing would be for it to come back to the volume here. This is trading. There's no perfection in it. So I break high again. So this is telling me potentially too low. Now I get VPOC migration. So I'm looking at this, and right here I'm going, and I see it rotate below. So for me, if it rotates below and crosses, then this might be too low. This sets up a long for me. And I took a long in here. And then I get VPOC migration. I get the rotation below. And I'm thinking to myself, well, it could come back here. So I put my stop under here, and then I'm going for the squeeze, so to VWAP. And now my long game plan is back on it. And and I'm saying, okay, now right here is a problem. So VWAP, because we have a structured trade in the Trader Lab called VWAP to VPOC. However, I hit my primary target. The market is short currently, and the trend, depending how you define trend and time frame, is up. So I'm long. So now I'm looking at it and I'm thinking, now if I don't rotate down, this is pretty strong. VPOC migration. This is suggesting higher. Now I have to be careful of mean reversion. In other words, we can always pause and come outside and come back in. That's rotational trading. Well, so far, though, it's not doing it. So I'm just hanging out. VPOC migration. In fact, I got to label this. So I'm pretty happy with my long. I was a bit disappointed in myself for not being more aggressive on the shorts, but it was a bit in conflict with what I was trying to do. So let's watch this thing. Yesterday's high. Remember, this was the target from this morning for me and the ETH high. And then 97, this. And then 97, this is my next target coming up. And I think it got to 9, whatever it is. This is my next target. Now, so the idea of the longs for me, pretty good, So this is a target, this is a target. Now you could be out of the trade. For me, the trade is over, except unless I take continuation trades. This is my target I posted. And there's more upside to this if we get going. Let me, and I'll get into what this is here in a minute. There is a short here also, but let me show you what's above us, just in case. This is a target, maybe, maybe not. 54.19-ish and 25, which I pointed out at the top of the stream. Any questions so far? Then I'm going to go into the short. How are we doing in YouTube? Welcome to the Trader Lab, everybody. Please give a thumb up in YouTube. Down at the bottom there, you'll see there's a little thumb. Helps the stream. I'm not a vendor. You know, there's no advertising. There's no cost to be part of Trader Lab community. The only way the word gets out about Trader Lab and the process and these structured trades that you can vet, build out a trade plan, which is what the stream and the Trader Lab is all about, integrating order flow, you know, with auction market theory, volume profile, using structured trades that you could reverse engineer. This is about the business of trading, not the holy grail of trading, because I don't think there is one. At least for me, going on 45 years, I've kind of left that to somebody else because I never found one. I never found the magic 8-ball that actually, you know, I did find the magic 8-ball. We had it on the trade desk, but it was kind of a joke. You know, you'd ask it, should I get long or short? It would say, ask again. All right. You know, so we come up here, and this was the target. Now I'm out of my longs, but because my targets were here, primaries. This is more of an extended target and what's above it, 54.19 and whatever. Now we have a couple of trades in here. The one that, and this is kind of interesting, and it's also a very aggressive trade because the trend is up. So you need to kind of in your mind, I think, is kind of determine where you trade, and before you come into the market is kind of have a game plan. My game plan was for two-sided trade early on, try to get outside for mean reversion to go for these. So this was my trade in the morning. As you guys know, I took a stop and then I took a scratch and then I just stood back because it wasn't aligned with my plan. And then the market went south of the border. And then I said, well, okay, I'm just going to wait to get back in alignment with the way I like to trade. And I tend to like to get in alignment with what I perceive to be the dominant side, which is the buyers. Now, the other side of the dominant side are the longs that are in the market who can get flushed out. So one of the ways I tend to think about it is and the market's long, we know that. So it's possible that the longs that are in the market are going to get flushed out. And I always say the market goes up to go down, the market goes down to go up. What we don't know is how, when, if it's going to go up before it goes down. So we could have gone up Thursday, Friday, which we did, in a mean reversion rotational fashion. We could have gone up this morning, then sold off, and then gone back up. And I thought we were kind of in the little dip down, go up, then go down. You know, it's like which way first, who, you know, and I have these configurations planned out. So for me, the longs were the first trades after a little rotation down, and to get these targets and then potentially go down, then go up. So, you know, I just didn't have it. It just didn't do it. And that's okay because my plan kept me out of trouble. So now, so let's take a look at the short. Any questions before I go into the short here, guys? Now, this is a hard trade, and it's very easy not to be able to get on it. But before I go further, any questions? How are we doing in YouTube, guys? Give a thumb up down there if you are, if you're conscious. Remember not to hit your head on the keyboard. Sometimes I'd like to hit my head on the keyboard. You know, trading is one of those things where there are times, you know, in hindsight, everything is pretty clear. You know, why didn't I do that? Why didn't I see this? Well, it's very difficult. So the way I find to deal with trading or randomness is structure. Now, it doesn't mean that you're going to it doesn't stop you from taking stops. Stops actually are your friend, though we experience them emotionally, not as such a pleasant experience, but it's there. The stops are there to protect your, so you're here for the next trade. It's not about the last trade that you're attached to. The casinos don't operate what happened on the last hand. They look at it over a large sample size. That's why the alignment with the business you're in is very important. Casinos experience losses like overhead and cost of production. We experience losses like a personal failure. And I have to tell you, the only thing you're accountable to in this business is following your plan. You can change your plan if it does not have an edge, or you shouldn't even be trading where you don't have an edge. Actually, you can improve your edge. You can throw things out that don't work. You can continually work on it, and that's what you need to be doing. But exceeding a loss limit or not having one, and because you need brakes on the on the race car, because it's very easy to go off the rails because of emotional stimulus and wanting to make it back, all that kind of stuff. We're all subject to that. And that's what the loss limits are for. And if you find you violate your loss limit, you need to make an arrangement with your broker, or if you're using some kind of software that it automatically turns the spigot off so you're here for tomorrow. I've seen over the years too many traders who had a lot of potential just lose it. And it doesn't take much to do severe damage psychologically and economically. So that's what and Trader Lab really goes into the psychology of this business. And really, I think anyone can learn to trade. It's a personal belief. It doesn't mean you will, but if you do the work, use the structured trades, and be part of a community where you can get support, you can learn a process. Now, the thing you need to do with that process is determine where your trade shows up and what are the conditions where that edge shows up. And then you wait. It's like waiting for a bus. You're not randomly jumping on buses hoping it takes you where you go. You only get involved where your trade shows up, and then the outcome is still random. So this is called the IB failure, the IBF. And the way it works is when you break in to the IB, then it is a mean reversion trade. It's going to flush out the longs. So I don't see a trigger for this. So I don't see any way into this. For me, I would, if I was long, which I wasn't at the time, I would be taken out, and that's fine, or not fine, but it is what it is. So now, what do you do with this? It does the Acapulco cliff dive, and is it all over? So let's see what we see. So we come down. This is the retail price at the time. This is called the volume point of control. So in theory, we're back in yesterday's range. This is the retail price. If this is up here, it sets up mean reversion. So let me just turn something off here. I want to get some of these lines off here. Hold on, guys. I just got to get things squared away a little bit. Okay, sorry about that. So let's go take a look. So this is a microcomposite variable high volume node. I pointed it out. It gave us a potential short, which was a continuation trade to the overnight low, which I pointed out I did not participate in. This is an important level. We want to see the behavior here. Let's just see. This is a test from above. Let's go back and look at something that you might find interesting. I say you might because who knows? Let's come back here. I'm going to show you symmetry and how the auction works. It's a very interesting concept, maybe. If I can find it. We break below, we test up, and we get to the overnight low. So this was a continuation short. Remember, I didn't take it. This set up the long, which took us all the way up, to the high side targets. Fabulous long, in my opinion. When we crossed over here and we had VPOC migration, so too low, longs. This, by the way, is a variable high volume node. I got to mark it. Watch how the auction works. This is a great demonstration of auction mechanics, and it's one of the reasons why I use this process, because what it does is it helps me see, based on the participant behavior as represented by volume, which is the interaction of the participants. If you go to the store, very, very simple, and this is now the retail price, and then the pricing structure leaves, you can't shop back here. You can come back and check it. Are there any S&Ps available at this price? If it's too low, you can't buy it. Think of it like they're all sold out here. They were all sold out down here also. This is a fractal, and this is a shorter time frame. So in the chop, the retail price, high volume, was too low. Sorry, we're out of S&Ps here. What about up here? Up, too low, we're out. What about over here? You can't buy it here. Off we go. Now we come all the way down. Remember, too low. Now it could go anywhere. So what do? Well, sometimes I ask myself, what are you doing? But what I know is not what will happen. I know what has happened. I know what the participants perceived as too low. And I know now that this is above me, all the way up near the top. And I know this was too low. Too low. Let's look. Auction. I hope you get something out of this. This is how I approach it. Now, I'm not saying anything more than these are levels. And when I come to a level, I'm looking at them to look for the behavior. And the reason I can do that is because I understand how the market works, and I understand what happened here. Last time we were there, it was too low. It was too low there. It was too low there. And in an intermediate time frame, it's too low there. This is the same as this. This is in today's developing time frame. This is in an intermediate time frame. When we, back before that I just showed you, when we broke below and tested it, it was too high. We went lower. Then when we crossed above, we went all the way across the range. Now we break down, we come below. If we go below it, it says problem in River City. If we test it from the other side and it's now too low, we do that. This is the logic. Let's look. Now I'm going to take you into micro. So this, and I couldn't trade this because I'm starting my stream. This is a long for me. I'm going to show it to you. So I'm coming down and, I don't know. So when I'm looking at this, I'm going, I don't know. But when I get to a location, what I do is I start looking very closely at order flow. This is just what I do. Now, I know it can do anything, so that doesn't change. The thing that's certain in trading is uncertainty. So let's look. So right here, now let's look at this behavior just so we can kind of look at some changes. Down, down, down. You see down, location, break high, break high. Now there's a change in behavior. So right here, I start looking at it, and right in here, I have to go back and I look and I have my alignment. I'm going to put my little line in here. Now, if this comes down below here, then it doesn't mean anything. I put it here because I see the sellers here. You can see the thing here. Look at the sellers here. Here's a buyer. If it keeps going, this might be my low. No. Sellers are still in control. This guy's absorbed. Sellers. I see buy absorption here. Antennas now starting to go up because these guys are being absorbed. There's the icebergs. Absorption. Sellers below. I see a buyer here. Are we going to get above these buyers who were the sellers overwhelmed? What this is telling me, let me tell you what it says. It says there's buyers absorbing, which is the iceberg, but there's more sellers overwhelming the passive side. So the sellers are still in control. That's what it tells me. So this is a problem if you're a buyer. Here I have more sellers. Here's a buyer. Absorbed, we're below him. Thanks for playing. We're going to send you a nice gift basket. Seller here, buyer here. So this guy is absorbed. Buyer here. Looks like it's going lower. Break higher. What does that tell me? If I'm over this and over this, now that's telling me, and I get over this, it's saying that this absorption is now overtaking the sellers. Now I see my sellers and my buyers seem to be taking control. And here's another way to tell it. Absorption detector is very helpful for this. So I have my sellers here. I got my buyers taking control here. Sellers take another shot here. They are not successful so far. Buyers are above them. I see the change in behavior. So now this puts me on alert to be looking at this thing. Buyers are here. The sellers are, so you see there's like a shootout here. So sellers here, sellers here. So do these buyers is there enough buyer here? And that's icebergs. To absorb the sellers and keep going. Well, these buyers get overwhelmed by the sellers. So I know this is where the behavior changed. So let's just look. What do I see here? Buyers overwhelm the sellers, selling iceberg buyers here. So I have a location here, and this is my test, and I have no clue. What do I have? Remember, in real estate, you've heard the term location. This sets up a long. Now, let's look at it. So I know about this, and I know about this. So right here, it breaks high again. So this, to me, looks like a long here. Now, what's important? It's priority of inputs. This and this. If this wasn't here, I'd just be sitting here like a deer in, in the headlights, as they say. So let's watch the structure. Let's come back to the structure. High volume is there. High volume is here. Right there. Just going to throw something here. So I have this. And basically what it is I'm just trying to outline these. These are consolidations. So when you get this rotational stuff, if I break away from it, then it's too low. Now I have another one here. It's a bigger one. I think I'll throw this on here. Just so you can kind of see it. So I have volume here. I got support there. This is resistance. The buyers were here and the sellers overwhelmed them. That creates this rotation. We come down. The sellers took a shot here and they were absorbed by the buyers. Sellers here. The sellers were active here. The buyers got stuffed here. What happens here? The same sellers that were selling here show up and they get run over. This is saying get long. Now you have to find a place to get long, right? So I got to look here, here, and down here if we come back. So there's my sellers. So right here is microstructure. You notice what happened here. Sellers got absorbed here and here. Now this takes more, it's more nuance. It might not be your thing. You need to be getting long in this structure. Let's look at it. We come back here. Where's this? Top of this consolidation, micro high volume structure. So you could be here, you could be here, you could be here. Your stop needs to be under this. This is all a matter of your plan. And your stops, what can you handle? Look where we come back. top of the consolidation, VPOC migration right here. Notice where we come back. This right here is a problem. We're either going to go and bounce off it and continue lower, but we break high. That supports the idea this is now too low. I'm going to label it. Now, not all of this is tradable. You know, I can tell you when I'm looking at this, I might be able to figure out what's going on, but if it doesn't fit, I have to wait for a structure that fits my trigger with and the risk parameter. So this is not what you call your easy trade, you know, and this becomes your target up here. So if you're able to get long, this was too high because we're now down here. So this is where it's too high. This becomes a target. And then if we can clear it, we continue. If not, we would rotate down. That's what I know about these structures. I don't know anything else about them. So I know if I can get above here, I go here. That's what this is. Then I can either, that's the end of it, and I come back here, or since the trend is up, in my opinion, and I have targets above, I can come back here, and if I can exceed it, these are my upside targets. Let's see where we are. Well, there you go. This is now support, not a recommendation. If we can come outside, it sets up a long back to here and up there. So right now there's nothing to do. If you're sitting long, your stop is out there and you're just sitting working on your crochet. It's not a day with tons of opportunity, you know, in my opinion. You have to be extremely patient. And if you don't have structures or triggers that you can operate in, then you don't have a trade. You just have to sit and wait. The idea is not to be overly active. The idea, at least for me, is to just wait for the right trades. Very easy to take a lot of stops in this if you get impatient, you know, and you start just making them up. Trader Lab is about the business of trading. It's very hard, by the way, because so many trades look okay at the moment. But the real key in trading is only to interact at a location you have vetted that has a statistical edge. Everything else, leave for somebody else. You can always add trades if you see consistent behavior under certain conditions, and then you vet them. And you need a sample size of about 50 iterations to see if you actually have an edge or if it's just random. Because everything looks like it has an edge, but you might find that certain behaviors over 50 iterations are guaranteed losers for you, and you wouldn't do them. Our eye sees, you know, we see structure, we see behavior, and we think, oh, that's a setup. Well, if we aren't able to anchor it with fixed inputs under certain conditions that are consistent, it's not measurable, then you're just gambling. So I suggest if you're going to gamble, go to casino, get the cocktails, maybe the ticket to the buffet. If this comes out here, and here, it is a potential long back to here. It's a mean reversion scenario. These are mean reversion trades, and for me, it's not that I can't trade this, but the better trades are out here, more range. The mean is this to this, this to this. And here's the other thing. What's under here? Stops. So I know the market could come out, pick off the stops that are sitting under here, check the VWAP or the mid or wherever, and the trade would be to come back here. Now that's a structured trade. This, not so much. So there's no trade for me. Doesn't mean you can't. I can't trade this. And here's why I can't trade it. Because retail traders like us are keep their stops under these swings. And as we're swinging and moving up, there's going to be more stops here. Look, this is not a strong structure. It's basically a triple bottom. These are not strong. They're weak, actually. So if we come down here, and this guy's waiting here, why would an iceberg be sitting here? I'll give you an opinion. The opinion is that he knows, like we do, that there's stops here. If we come down and take the stops out, he wants to take the other side. So that is adding to the potential underlying to come down here and get in front of this VWAP in mid. And then you just got to see what it does. And if you get a structure here, it would be a long back to here and then up the food chain. Not a recommendation because, everybody takes stops and it may or may not happen. We may just not come back here before going up here first. That's also possible. So any questions so far, guys? This is just structured trading, using a trade plan, using structured trades that you can vet. They're available to everyone in the Bookmap Discord Trader Lab chat. There's no cost to be part of the community and to take advantage of a lot of additional education, and there's no cost for it. Stocks, options, crypto, swing trading, algorithmic behavior, of course, order flow with a high-tier tool like Bookmap. Options, I don't know if I mentioned that, market maker behavior, just tons of stuff, and streaming all day long. Different streamers, different approaches. There's not one way to trade. I think what's pretty important for traders is to find what resonates with them. But it's not a smorgasbord in the sense that you take everything and throw it against the wall. That is not trading, and many of us have done that. I did it with trading systems. And systems are math-based processes. So when I was managing dollars across a lot of asset classes, it needed to be systematized. So I kind of went down that path for a number of years. And I was always doing walk-forward testing, backwards to walk forward and samples, this, that, and the other thing with data chunks. And ultimately what it is curve fitting, no matter how you slice it. If you're tweaking your indicators and all that, you're just doing what I did, except I did it with a software product. You guys are doing it with the eyeball, maybe. So it's all a function of the same thing. So it really, now remember where the stops are, right? Here. So what do I anticipate? The market goes up to go down. I also anticipate the following. Write this down. Think like a retail trader. Don't act like one. What do? Their stops are here. So let's wait. Now this guy pulled his order, this iceberg. We'll see if he comes back in. He canceled, you see? So now we want to see what happens down here. Remember where the stops are, here. Think like a retail trader. Don't act like one. I cannot get long because of this. If I take them out and all I'm doing is taking out weak longs, then I'm going to be looking somewhere out here, and these are not trade recommendations, for a long back to here. This is the trade, and then maybe back up here. This would be the next target. So we'll see what it does. And again, not trade recommendations. I take stops like everybody else, and it's just okay. This, still, I cannot get involved. Would you be taking a long here? It might be the trade of the century to come back here, because this is the target. I cannot participate. Not saying you can't. I can't. This is a location. The problem I have is the stops. So I cannot get long. So we'll see. And that's not a recommendation. You can get long. So let's see what it does. In the meantime, do you have questions? One of the things I do is anticipate behavior. And part of that comes from my own experience of in trading is putting my stops, kind of like where everybody else did. What I have found, and it doesn't mean it won't just keep going up. That's not the issue. The issue is it's not one trade. It's what happens over a large sample size. I cannot get long here because now I know there's more stops. The buyers here are going to have their stops here. The buyers in this leg and this leg have their stops here. The buyers from here have, so all these stops are piling up here. So I cannot get long. So I have no trade, just me. And now here's what happens. If this goes here, which is the target, and then comes out the top, what's going to happen? My emotions are going to be triggered by this fight and flight and regret and, all the hindsight stuff. I have to manage that. What I know is I will experience the emotions, but that has nothing to do with trading. So I have no trade. And the reason I don't have a trade is over a large sample size, this trade fails. So we'll see. See, that's the element of randomness. I know for me, when I would see something like this in the past, the absorption and everything, I would see this come back and check it, and it could be a long. But I can't enter here. I'd be entering in here. This is the mean. So I would have to get, I have no range also. I know if I can come out under here and take the stops, it'll accelerate. And if I come further out, it's a better location. Come back here. So there's a lot of elements for me that don't allow me to take this because I cannot get in here. And by the time I'm conscious and get filled, I'm in here, and this is where I'm trying to go initially. And that's called mean reversion. I cannot take the trade. I just want you to know the thinking behind it. So that's it. You have questions? Post them. A plus setups? Cresco's asking me in the YouTube. Thanks for the question. Are there A plus setups? I think there's setups under certain conditions that are better, but I kind of take them all the same way. To me, if they have to be A plus all around, if you will. That means they have an edge, or I don't take them. So I don't break them down that way. At least I kind of think a little bit more in the sense of, do I have an edge in this context? Where is it? And do I have a structured trade? I have a long in this context, but this is, if I was taking it here, this is a D minus. It's not an A plus. If I get it out here, it's now qualified. So I hope that answers your question. Because why would I take a B or C trade? Why wouldn't I just take A's? You know what I mean? Does that make sense? Desmond, are you asking me the question about scaling in the Bookmap Discard Trader Lab? Now you notice what's going on here? Now I'm looking for this. The stops under here. It doesn't mean anything. It's not a trade recommendation. All we did here was come back to the mean, right? And my entry here, which is not qualified, I don't have a trade here, would be in here to here. So it doesn't fit. And remember where the stops are. This is what my experience has taught me, which is think like a retail trader, don't act like one. So now the longs that are in here with their stops here and under here potentially are going to get taken out. There's also potentially stops at the VWAP in the mid. Somewhere, and this is an outside edge. Let's look at this. This is a consolidation. This is the outside edge. So out in here, I'm going to be stalking a long. This is what I've been saying. So now you see it. This is why I don't get involved, because of this. So let's watch the behavior now. This is not a trade recommendation. I don't call trades. This is absorption. I want to see right in here, and there's going to be stops at VWAP and mid. So it's possible that there's longs with their stops here. So I have to be looking very carefully at this micro high volume right here. I've now gotten the stops. There's 161, there's 45, there's 2. Right here is a potential long to here, not a recommendation. And it could still come out under here. This is part of the joy. Let's see what it does. Hold on. Very important right here what this thing does. Let's see what it does. Keep an eye. This is not a trade recommendation. The buyers now need to overwhelm this sellers. This is your target, not a recommendation. This is called mean reversion, mean underlined. And the reason there was no trade, and this can fail like everything else. I don't call trades. I can tell you in mean reversion is very difficult for me because I'm trying to pick, and this is what's so difficult, an outside edge. Where's the outside? Is it here? Are we going to get buyers here and then take these guys out and get the stops under VWAP and mid? This is a long back to here. It can fail. And so you're asking me about scaling. The scale is ahead of this for this long if it holds up. If not, it's going to take these guys out. The trade would fail. It's just trading. There's nothing more to it. So we'll see what it does. The concern with the trade is that there's stops at VWAP and mid. So if it comes down, now there's a couple ways you can deal with this. Subject to your trade plan, you could micromanage this thing, have your stop right here. You get taken out. That's life in the fast lane. And when I take a stop in a situation like this, and it's just me, I'm not saying it's a good plan, because if this does this, I don't want to be in it. If it only comes down and takes me out, and then I see these guys who bought here absorb again over in here, I would put the trade on again. And it's not a recommendation. I look at these things over a large sample size. I can't worry about taking stops because I take stops, and casinos don't worry about paying the gamblers either because they have to pay the gamblers. It's called overhead and cost of production. There isn't a business that doesn't have it. So we're watching this. This is where the absorption was. This is the level. If you want to buy pullbacks, this would be your long, and this is your scale, right? This is the mean reversion trade. So now we'll see what it does. Now it's up to you where you scale. I want to answer that question. There's two ways to do this. One is just to get risk neutral, which means from entry, wherever it is, to failure, that's the range for your stop, and you trade one to just cover the stop on your runner, or you just trade to this as your scale, and now you manage the long. This is Trader Lab Structured Trade. I hope you're getting some benefit from this, and if you are, please give a thumb up in the bottom of YouTube. In Trader Lab, this is, you know what this is. Are you following your plan, Trader Lab, and were you anticipating this trade? And remember, they're all random. Who knows, right? So this is a Trader Lab long. Why did we wait? Because we're looking for retail trader behavior. Why didn't we get long here? Because we had no range and we wanted these guys to get taken out. They got taken out. We saw the absorption. This is Trader Lab Structured Trade. Location. There is your high volume and your absorption. There's the break high. There's the test. More absorption. The buyers over here came back for it over here. So you've got your long. So when you're waiting for this, break high, buyers took control, absorption was here, the volume was right there. So you would know right here, chop, chop, break high. So this is a trigger. You could get long here, stop under there. Here, pull back to it, the microstructure. This is trading in fractals, long, stop under here, scale here. Now you're just hanging out. Now, what are the possibilities of this thing? You can come right back here. So your stop is under here. If it takes this out, you're going to scratch the trade. This is trading. We also know there's volume in here. And this was the support area. So we'll see what it does. We're going to observe this location. This is where the sellers were absorbed. Sellers were absorbed. Are our buyers still going to show up here? Let's watch. And if they do, then it's back to here. And that's not a trade recommendation. This is kind of how the cucumber unfolds. So let's watch. Buyers were active here. We need to see if we get our buyers. Now, right now, I see more sellers in here than I do buyers. So the question, and you can see them here, two-sided trade. The question becomes, if we come back in this area, right here, this is where the absorption was, do the buyers have enough energy and momentum to consume these sellers and squeeze back here? If so, you can kind of see what's going on. You can see the order flow, and I don't know what'll happen here. You know, this is part of the joy of trading. It's like, what's going on? But here's how order flow helps us. Absorption. Out here, the seller's absorbed. Down here, if we can hold this little microstructure, the sellers were absorbed here. Is there more buying than there is selling? So this is absorption. And where was the absorption? Here. If I extend this thing, maybe I can do that. Maybe not. Good question. Never know. See what I mean? So I draw these things, but I can visualize them, you know. So this is called trading in fractals, if you will, because what I'm doing is, this is a developing higher time frame. It's the mean. The mean is, if we're in rotational trading, we tend to do this kind of thing. If you think the trend might be up, and maybe it is, and it is for now, because we already got the shorts in the market, that's your fuel. That's why we got the long was where I was going. If I still think longs, because I have open targets here, this is my target for the day. Doesn't mean it'll get there now, ever, never. And up here, these are my targets. So for me, if I'm and what is this? This is a location of high volume or a retail price that we left behind last time we were here. And the way the auction works is it tests, and it's almost like this is the price that was too high last time we traded up here. Well, in the developing time frame, these are prices as it moves around that are too high or too low, and it transitions. Way down below, wherever we went, gotta find it. Down here, the ETH low, turns out that's too low. This is too low. We're now above this, which is not that important to me, but we're coming back above all these levels. We took out yesterday's high. We took out the ETH high, and this was my next target on the way up. I get over here, which is an intermediate time frame. I come back here because it was too high. And the nature of this, the way the market works, this is why volume profile and auction market theory is the fundamental basis of market mechanics, is to come here. Is this really too high? Well, last time we were here, it was like, I'm not paying that, and we went down. Now, what does the market do? Tends to come back and go, is this really too high? That's why it's a target. And of course, it's not a trade recommendation. So why was I getting long, you ask? And where was I getting long? Now you know. And now you know why. This is structured trading. This is Trader Lab. Hope you're getting something out of this. I believe anybody can learn to trade. but you do have to know where your edge is, and you do need to develop the discipline not to engage when you don't have edge, because then you're gambling. And I always suggest if you're going to gamble, it's always better to go to a casino. You get cocktails, ticket to the buffet, and if you lose a lot at the table, they might even give you tickets to Adele. But in this, what we are doing is we want to sit on the house side of the table, and the only way we can have an opportunity, in my opinion, is to only interact with the gamblers by sitting on the house side of the table and approaching this business the way the casinos do. They have a successful business model. We do not need to reinvent the wheel, in my opinion. The wheel already exists. What we need to do is align this business with the business of gaming. So if we understand why the casinos are successful, how they do what they do, and not do what gamblers do over time, not the next trade or the one after, but over time, if we do the work out front, and that's what Trader Lab is for, then we have the opportunity to participate. By the way, the next target, and it's not a recommendation, is here, out here. And then, so if you're running a 2-lot, subject to your plan, it's to here and to here, or to here, and then trade management. And you take, of course, if you're taking a 2-lot and trying to run the second one as a runner, what you end up doing is managing it, but you're behind it. So that means you're always going to give something back. Psychologically, you need to already know you accept that. What I found early on when I was running 2s, building out stuff, I would have targets that were number 3, number 4. And I'd go, well, I'm going to skip number 2. I'm going to just make number 2 number 3. And what would happen is I might get to number 2, and that would be the end of it. And I'd never get to 3. And, I'd end up scratching or giving back all this open trade equity and breaking even on the runner. And I found that if we accept randomness, there's 2 things you can do. You can just take the next target and leave the rest, or you head towards the next target with a trailing trade management process, which you would have anyway. And then because you can anticipate a reaction, and then you're just trailing, and you accept, and this has to be in your trade plan, you accept that you may leave 4 points or 3 or whatever on the table because you were going for that. Is it worth it? I don't know. So that's an individual trade plan. I hope that makes sense, and I hope you're getting something out of this. Please give a thumb up in YouTube if you're getting some value from Trader Lab and what we do. This is what Trader Lab is about. The logic and the rationale of why we were looking for longs. And the other thing that's so important, in Trader Lab, you guys ought to screenshot this, is why this was not a long here and why it was anticipated that this would get taken out and that the long was here. From there to there, you had 2 opportunities to get long. Here to here, and then the next trade is managed and it's going for this. Not a recommendation. It could still come right back down here and mean revert. This is the thing with rotational trading. It is annoying because who knows? In trading, you don't know. And in trading, your job is just to get in alignment and take your trades. Get risk neutral, and then you have a trade management process. So subject to your trade management process, if we come out under here, we still have a potential long back here. So remember where the trade was. It's here, here, long to there, and then out to there. If you get taken out, subject to your trade management, you'd be out of the trade. Or you have your helmet on and your runner, because this trade does not take a stop, because you'd be risk neutral, and then you accept you're going to sit through this nonsense. And that's what mean reversion is. Now we can come back and look at something else here. Where is support for this? It's there in the microstructure right there. Let's just see what it did. Now, I don't, I'm not saying this is a trade. I'm saying is you can slice and dice this down to any structure that you want, and it's up to you. What do we know about this? See that right there? That's your high volume. So in a fractal, what do we know? Well, we got VWAP in mid. We have an outside edge of a consolidation. It's one of these things. We can easily pop out here and take these stops. That's life in the fast lane. Anything is possible. So there's no predicting. We can all wish and hope, but who knows? So we have support here. We have absorption. If we can get back above here, these guys got absorbed. Support is here and here. So we need to clear this. If we don't, then we can come down and take these guys out. That's just the way it works. I don't have an opinion because I can't predict the future. It's one of the things I have not figured out yet. But I can anticipate behavior. So I anticipate right now the sellers are here. If I don't get below this, or if I just test it and reverse, then I'm coming here. If I get below and I get more selling under here, then these stops under here are vulnerable. That's what I know. Notice we have an iceberg looking to take the other side. So let's watch this, okay? I've got about 8 minutes left. If you have questions, please post them. If you're in YouTube, I hope you're getting something out of this. This is Trader Lab. It's based on structured trades. They're available to everyone. There's no cost to visit the Trader Lab community and become part of a serious community. It's all about building the business of trading, and business of trading means developing a career plan and understanding how the market works, why it does what it does, how you might get in alignment. Why do I anticipate this behavior, and why do I anticipate it comes back here? If you don't know that, then I think you're missing something that might help you. And it's called auction and how the market works. Our market is not defined by our indicators. It is defined by participant behavior. And with order flow tools, we can observe what's going on. For example, if we see sellers here, it doesn't mean necessarily the market's going to go down. It means we have aggressors. Delta is market orders. Market orders are a function of stops become market orders and, of course, sellers, right? If I see the aggressor and they don't go down, what do we know? The passive side was absorbing. What do I know happened here? The passive side were buyers. Notice where we come. Do you think it's possible that the buyers here and the buyers here, if they get a chance to buy it when it comes on sale, might step up in this area and buy again and buy again? Why is this line sitting here that I drew? Because that's where the volume was here, and that was my location for potential mean reversion. This is all in Trader Lab, and can you trade this level 78 to 81? It's up to you. Where I like the trade is out here because of range. But I know what might happen here, and I'm monitoring my trade. Now, if it comes all the way down here and takes me out, it's just life in the fast lane. Doesn't matter other than how my emotions are triggered by it. Regret, shoulda. Oh, I should have got out at the high and bought the low. Yeah, I know. We all shoulda, but we don't because we can't. But what I shoulda is follow my plan. That's how I grade myself, not the outcome of one trade. Did I follow my plan? Now, if my plan doesn't work and I don't have an edge, then I don't have a plan. If I have a plan with an edge, it's the random distribution of outcomes. And I'm gonna pay to play. So do the casinos. It's called cost of production and overhead. You need to reframe these things. You really do. And that's what Trader Lab is about, helping you understand the business of trading, why the market does what it does, and how you might get in alignment. And then who knows? Random. We do know what happened here. Now we want to see what happens when we come down. Stops were at VWAP and mid. So this trade would be over. Where's our next trade? Out here. Now we're going to watch, and this is not a trade recommendation. Let's watch the behavior. 182 stops. I'm going to be looking for absorption outside. Now, if it keeps going down, then I've got nothing to do. I just sit and wait. I got nothing to do. But the key to this is the trade management, getting risk neutral, taking structured trades, and accepting the random outcome. So let's watch here. These are not trade recommendations. You want to see now if the buyers come back in after the stops are out. We're going to look right in this area, not a recommendation. What we want to see now is, can these buyers squeeze out these sellers? So far, no. It's really two-sided. As I've been saying, this is just annoying. Micro volume there, micro volume here. Let's watch. We have to clear that volume to reverse out of here, or else it's just going to continue. That's not a recommendation. It's not a short. It's just a, let's see what happens here. Let's watch the behavior. I'm running out of time, guys. Please give a thumb up in the bottom of YouTube. There's a little thumb thing. Please click on it. It helps the stream. If there's also a link down there, if you're interested in the Bookmap Discard Trader Lab community, there's no cost. Watch this behavior here. There's no cost to participate. There's 60 PDFs of structured trades you can download and reverse engineer. See if it can help you get a sense of structure, so you can vet these. There is no magic bullet for trading. It is always random. And that's why trade management and sticking to a plan where you know you have an edge is the business. It is not going, well, this looks like it's going to go up. Is this a structured trade based on our location? This was too low. So this is an area right here to observe, and this volume is an area to observe, not a trade recommendation. Yes, chop, 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 chop. So let's see what it does here. I'm out of time, guys. Please give a thumb up in YouTube. There's a link in the bottom of YouTube. If you're interested in visiting the Trader Lab, you can download 60 PDFs of these structured trades. The job is to find what works for you. There is no one way to do this. What I do is I just look at structure and locations. We are falling out of this distribution. We can go wherever. So at the moment, this is an important location. This was important. There's nothing going on here. I'm just going to be looking out at these levels. By the way, there is no cost to visit the Trader Lab. You can download the 60 PDFs. There's a library of webinars on this process. I suggest you would start with the primer webinar so you can understand how this works and what this is about. It's got about, 30,000 views. It's pretty popular. And I remember I'm not a vendor, so there's no cost for this. But you can come and join a community of traders that are pursuing the same thing, and that's the business side of trading. And like everything, past performance is never indicative of future results. You got to really develop what works for you. You only need to start out with one structured trade that has an edge. That creates a template that you can build on. And then you'll also get to discover what the psychology is and how that impacts your behavior. 57.58 is an area to observe. And since we're in two-sided trade, it's very much mean reversion outside in trading, and you have to try to locate the outside. That is the joy. Thanks again, guys. Appreciate you stopping by the Trader Lab today. Hope you're having a decent day. Be patient. Do not be in a hurry in these conditions. It is two-sided, and we have a bunch of reports coming out starting tomorrow. It's going to be a very busy week and anticipate a lot of volatility. We just came back to the 57, 58 area. It's an outside location. I see absorption. So we might want to observe this location for potential behavior. It's not a recommendation, subject to what happens right, and it's an area. It's not a wall. Subject to what happens here, we might mean revert back to 80. So just keep an eye and see what happens. Thanks, guys, and please give that thumb up in YouTube. Helps the stream. And remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, and evaluate your trade plan and compare it to this. I'm sure there are those of you who are developing trade plans, and I see the great posts in the Trader Lab. Keep posting your screenshots, your commentary. This is what makes the Trader Lab a special community for traders who are looking to build out the business side. Thanks again, guys. Please give a thumb up in YouTube. Use the link in the bottom of YouTube to visit Trader Lab. There's no cost. Look forward to seeing you there. Thanks, guys.